General advice, warning and disclaimer. Opinions, thoughts, research, recommendations and content presented are general advice only. They do not take into account your specific circumstances. Please consult a financial professional before making any investment decisions. For further information on our disclaimers and general advice, please see our website and our PDS.
Hi there, welcome to this week's edition of, exhausted Bulls versus Bears.
Very long week.
Yeah.
Very tiring. Yeah.
Turbulent. That's an understatement. Basically, we're not going to get too stock specific today, to be honest, because by the time we actually publish this in an hour or two, the whole thing could have changed. So we're basically just going to stick to, a little bit more broad because, realistically, we've been pretty broad this week. Mm-hmm. And we started with the index and things. So this is what I wanted to start with, boys, and just have a look here. So you're not going to have the benefit, obviously, if you're not watching the podcast, but from Friday night, which starts there, this is a 30-minute chart, right? It's from Friday night, we dropped 11% until basically the open.
Are these the S&P futures?
No, it's NASDAQ. So NASDAQ down 11%, so Friday, then Monday. Then we opened and we rallied. Then we rallied 10% until we got to, basically within about 24 hours. Then we dropped 7% in under 24 hours. And then we rallied 13%. But in that was a 10% rally in about a minute or thereabouts. And then we finally peeled off 7% at the end of the week. So most years don't have this range, and we've had it in a week. We've had 3 of the biggest intraday turnarounds in stock market history, which has made it very hard for Australian, because we're only open 10 to 4. Mm-hmm. If you've taken on those index things, it's been quite risky because you're literally swinging in the breeze for 2/3 of the day. Yeah. But obviously it's all about Trump. We probably don't need to really fill people in because by the amount of phone calls that I've had this week, everyone's pretty much watching the news. So I think I've averaged at least 40 to 50 phone calls a day from clients. So I'm lucky I've got my voice.
Yeah, and the media has well worn out the trillions and billions lost in market cap. So every time that there's a dip, it's always billions lost in.
And then it rallies back, and they're like, and then So the media knows
and changing all through the week.
Yeah, the media knows that fear sells. So basically, they've done a really great job of whipping up a frenzy.
Yeah.
We've done media this week. It's more been an arseache than anything else because we've been so busy at work. I did the call today and we got to choose our own stocks of the week. JT, you did yesterday.
Yep.
Yours was much harder than mine because you had to do the technical episode and every chart looked the same unless you stood in your head.
Well, I guess I'll highlight this when I go to the commodities, but the basic thematic is that every chart got absolutely thumped except for gold. Yeah. So gold had a small pullback to just below 3,000, but after that, it just whooshka to new highs.
Yep.
Every other chart got absolutely trolleyed. So silver, copper, all the metals, any stocks, any Mag 7, every sector got absolutely walloped. So you could have had the nicest uptrend of any stock out there, and then whooshka. So
and we did sell gold this week, but it was to buy gold miners.
Yeah.
So which actually, because obviously on that Monday, and for the record, because we don't, you've obviously, I get picked apart on Twitter for every stock of the week that I get wrong. But, our clients have done extraordinarily well this week. We've been 50 to 60% cash since late Jan, early February, which was the plan. It was outlined in our market outlook, which is free. And everyone could have read it. And we had 10% in gold. We've had physical gold and we've had some Newmont and we've had some smaller gold miners as well. So this week we basically started by buying index, which we did Monday morning, which was possibly the scariest trade I've ever done, nearly. And I traded through the GFC, so that's saying something. But it was our plan, was 7,200 where we started buying.
Yep.
And you looked at me and went, "What?" And I'm like, and in my head I was going, "What am I doing?" And but we stuck to the plan, and we ended up. That was a gear, which is a leveraged.
Yep.
But we managed to sell that basically the high of the week on Thursday.
Yeah, Thursday morning. You were like, okay, we had to bounce.
We just got to get out.
Yeah,
so that was supposed to be long term. However, we got a 15% bounce.
Yeah,
on a 2.5 times leverage product. So we I know when
lock it in where
you can in this market, because let's face it, this weekend he could declare war or he could strike a deal. No one knows, not even him, I don't think. But basically Trump's played bluff poker with a pair of juices. And he's had to backpedal because China just went all in, and it was
not that. It was actually a lot of people were saying it's actually the bond market that's what's getting. So I look at the 10s 30s spread that actually broke out to new highs sometime maybe on Monday and Tuesday, and kept rising as well. So if those that don't sort of follow the bond market, just to put it simply, the long end of the bond market is how the government funds itself. Yeah. And if they lose control of that, if the yields start blowing out, then we're talking an actual debt.
And we highly suspected he was trying to derail the market to get interest rates down because the Fed didn't want to cut rates. And there was also rumours that China actually dumped US bonds to push those yields up. Which sounds very China. I wouldn't have retaliated with tariffs. I would have just dumped US dollar, which I guess is what they were doing by dumping their bonds. That caused problems for them. So at the moment, Trump's playing checkers. They're playing 3D chess, and with a 20-year head start.
Exactly.
Yeah.
I was about to say, they started playing a long, long time ago.
So look, I think that big rally gave everyone an opportunity to get out.
Mm-hmm.
I think you're mental if you didn't take the opportunity to get out of at least some stuff you were worried about then.
Yep.
But I think that's a massive pressure relief, or it's like pressure valve release, because if we were still down there, people are still going, I'll hold on. But like, you've had your chance to get out now. And I think that's why it was off. Was it 7% from the high? But about 4% last night. This is futures as well. So these moves, because a lot of the moves have happened after market.
Yeah, exactly. So overall on the XJ, the way I was looking at it, and I remember having a discussion on Monday, is that like the high was 8,600. We've now fallen back below 7,600, which is kind of where the highs in 2020, 21 were. And I was like, we'll probably range down here. I didn't expect it to bounce straight up to 7,900 or close to 8,000.
Well, we said 7,200 as a first entry, and we were laughing when we put in the alert.
Yeah.
So, and then I'm sitting there going, oh, God, should we do it? And so that, just goes to show folks, like, this is scary. We've been in markets for ages. This is scary for us too. Like, and the media doesn't help. But it does show. We've banged on about plans, and everyone's told me to shut up for 6 months. But, this week is a prime example of why you set a plan, basically. And we were buying Macquarie, and we had a shopping list, and it was more. The shopping list was a bit fluid. Obviously, the index being first was always top of the queue.
Mm-hmm.
But it was more Goodman just kind of fell the most. We missed Macquarie. I think maybe people who had resting bids in maybe got them, but by the time we got around to it, it was already $15 higher.
Yeah, it was like 160 for a second. Yeah.
WiseTech was one that we added because in a NASDAQ that was down 9 or 11% in the futures or something, and it was up on the day on Monday, which means it kind of ran out of sellers, which is why that one jumped up the queue. And CSL, which, the AFR did a hatchet job on and said they were going to lose all of their revenue from their Melbourne factory, and which is 1.6 billion. So they've smashed that, and it's cheap as So but they're great. They're all fantastic companies. WiseTech's doesn't have my favourite chairman in the world, but the more I've
acting CEO consultant, you mean?
Either way, he's but realistically, my I've changed my view on the key person risk. There is like, even if he is one cheeseburger away from key man risk, I think the company's actually a better company without the guy.
Yep.
70-year-old head of innovation. That's the least used phrase in the English language. And it's a $17 billion company. You can't tell me that he's pulling the strings like it's a small business.
Yeah.
He thinks he is, but like, I think it'll be a situation where if he leaves or he ends up getting caught again, because I'm sure there's more dirt out there, but yeah, I think WiseTech's better off because the company's its own beast now. So, but yeah, so we've sort of gotten over my little hatred there.
So just want to say, so on the front page, this is a little summary of an article that Mark put out on the Monday. What should investors do? It's a good summary. So just check our website for.
It's important to know I wrote that at the start of the week, not the end of the week too, actually. But
yeah, but the thing was like, I was just going through it, and it's like, yes, that's exactly what you should be doing. But yeah, great article. Another quality piece of content from the leader of NBC.
Yeah, we're a little bit light on content this week. After Tuesday, we were like, I don't think I haven't had a lot of time, to be brutally honest. But yeah, look, we're not going to get too deep into the stock specific. Rich, you were saying Telix and CSL everyone
come out and said they're relatively unaffected by the tariffs. So,
which we knew well, but like I said, the media is doing like the proper fear hatchet job at the moment. So
absolutely, CSL's 90% of their production is in the States. So
yeah, so they could be a beneficiary for God's sake. So should have bought more. But yeah, we and look, it's if you're having an operation, you need blood or you need plasma. You're probably pretty price elastic, I would have thought. Like, you kind of need it. Like, it's not a luxury handbag. It's not a.
You're not shopping around.
You're not shopping around for your blood. It's like, do you have it? Yes, and then I don't think cost. I don't know. I've had a couple of surgeries. I've never asked how.
Yeah, exactly.
Can I get some cheaper blood? Thanks. Like,
send us the invoice.
Yeah, send us the invoice. Like, Trump's threatened. No, Trump put tariffs on a company this week.
TSM.
Yeah, TSMC. Yeah. So I was almost surprised. I thought he might. I genuinely thought he might put tariffs on Hawaii at one stage. Someone's probably pulled him up. But
is that just for their offshore manufacturing?
It was still in, and he's already went it back. Like,
because they pushed for TSM to have onshore manufacturing in the States.
Yes, which they've been dragging their feet on because they know that if they've got manufacturing in the States, they're only about 3 weeks away from China just rolling in the warships because the US will leave. Like, why would, if as a country, why would you give away your only bargaining chip?
It's like, let's just take the secret sauce and just build it somewhere else.
Yeah. And bye all our defence.
Yeah, exactly right.
I think they're. I think the Taiwanese government have probably subsidised TSMC to
absolutely
to make sure there's the only place in the world that you can't bomb.
And one thing that didn't actually pop up, but I thought interesting, was that Monash has corporate news. So
right,
yeah. So Monash, for somehow they've switched eggs, and so.
Oh no!
Yes. I don't know the full details, but somehow there's some sort of mix-up, and someone's given birth to a kid using not their own eggs. I don't know how that's.
What do you? Yeah, I don't even. I'm not
negatively affect the price. Or?
Of course it did. Like, they actually had to come out with an announcement this morning.
Wow.
I didn't see what the stock was down, but it was on some sort of feed. I was looking at it last night and go, "Oh, that's not good for the stock."
I've got enough stress this week without having to deal with that. So yeah, well, I think we might move on from there, but I'm just going to make a quick adjustment to this screen.
That's all right. And US news. Do you have anything up there?
The retailers got hit pretty hard. Nike, Apple this week.
Yeah, we got it. That's what I was dragging up here. This is the week.
Did they rebound at all? Or?
Yeah, they had a bit of a rebound after the sort of cessation of the tariffs from Trump on, I believe, Wednesday.
Yeah, so here we have the week for the S&P 500. Now, obviously, beginning of the week, this was a lot more red. But, obviously after Trump did that pause on the tariffs, we had that 13% up there on the NASDAQ. So, obviously, the the market shifted. So obviously Apple's still down quite a bit. Where's Nike? Oh, just where's
Yeah, the bank's down. JP Morgan actually has earnings tonight, I believe, as well.
That's the thing we have. I put it in, but yeah, US earnings start tonight. The financials start tonight.
Yeah.
It's a Friday night.
We had a few announcements earlier in the week, but the big ones are tonight.
Yeah. So look, it's there is some green there. I mean, obviously, health services that's been up all week. These bits of green through here, that was literally from yesterday morning, from about 4 o'clock onwards. But they were deep in the red. So
absolutely, that's what shocked me. Is like Nasdaq up 12%. I haven't seen 12% before. Apparently,
I woke up in the morning. I went to bed at 11:30 that night. It was down 3%, 2.5%.
And we were thinking,
and I got up at 5:30 and I looked at it and I went, "There's something wrong with this." I was almost like I rubbed my eyes and shook my phone and like a monkey. I'm like, no way. And that is one day the biggest day in points, but like I've been through everything since the '97 Asian currency crisis, and I've either been a trader or in the early days a broker. Never seen that.
Yeah,
never. And there's some pretty whippy ones in the GFC, let me tell you.
Oh, absolutely.
Not so much bounces, more so than outside. So they should have limit up. But yeah, look, when you were saying Nike and the retailers got a little bit smoked up.
They had a bit of a bounce once the reprieve came through.
Yeah, right. So, which they would, but I mean, Apple as well. I think what it highlighted in Apple was like, basically someone's done the calculation of how much it would be to manufacture one in the US, and it was like it'd be $10,000 a pop or $9,000 a pop or something.
Apparently, they engaged 5 787s on Monday to fly full of iPhones into the States, so they didn't have to.
Yeah, right.
Tariffs on those phones. I don't know how many phones they got in, but
the bottom line is that it made it very apparent that they haven't had a new idea in 10 years, and that's their only revenue line. So
we've got a release later this year as well.
So
sales
a new camera.
But there must be some sort of business opportunity here where. So that don't forget,
iPhone smuggler.
Yeah, exactly. So back when there was the baby food, smuggling in, from here to
milk.
Yeah. So people were smuggling A2 milk or baby formula into China. This has to be the reverse. You smuggle the ones in through Australia without the tariffs, and then bring them
if you're the cartel, if you're smart, there's heaps more margin in iPhones than cocaine now. Like. So basically, you'd be switching your tunnels from Mexico and just be. And what's the heart? You're not going to get 25 to life for smuggling iPhones.
Exactly.
Like, if they're having a gang war over counterfeit cigarettes, I'm pretty sure that cigarette
like,
smoking.
Is that the IMAX Pro? Okay.
Yeah. Just all of a sudden, there's a guy. You want to buy an iPhone? Like, but yeah, I mean that's how ridiculous it is. Like the guy doesn't have a plan. It was very clear he doesn't have a plan. Everyone worked out he doesn't have a plan, and then he backed off from the non-planned plan.
Yeah.
So it's been a good week to sort of see the forest for the trees, albeit fairly exhausting from an emotional standpoint for us as brokers, because people who are in large amounts of cash ring up panicking. It's like it's okay. It's like. So I felt like maybe we just send Valium out next time for the clients if we're in this position. But yeah, so it's and God knows what happens this weekend, right? Like
and as you said, like basically Trump could declare war or declare peace.
Yes,
and it wouldn't surprise you either way.
No, nothing would surprise me after this week. I was pretty public saying I thought he would cave on Wednesday, and he caved Thursday night, which was a massive amount of luck. I'm going to claim it because you very rarely get one of those.
Especially with Trump.
But I was like so surprised that he caved so quick. Like pretty weak, in the end. But I think that bond thing really, they obviously are worried about the refinance of that the supposed $7 trillion.
It's 7 trillion. Look, they got 36 trillion, and they have to refinance 7 trillion this year. So that's That's what happened when when Yellen was in there, she just kept pushing the shorter term rates, and then now it's come due.
Yeah, thanks, Janet.
But that's where people were like, the people that were quite savvy with the markets, like some people that had paid off their mortgages or were on the lower end of the mortgages, they were using their house as like a carry trade.
Yeah, right.
So
yeah. And now no one will move.
Yeah.
Houses in the US because they basically double. Well, they go from 1% interest rates to
that's
5.
the thing. So you've got a
30-year
mortgage fixed at, call it 5, and then you're getting 6s. So that's the carry trade, and you're like, okay, well, you're running a mini bank there.
Yeah, there's many arbitrage opportunities potentially in the US if he actually follows through with any of this. He did also put out a tweet 3 hours before saying "good time to buy."
That's
which people have been genuinely upset about this week.
Yeah, because they didn't take advantage of it.
Well, that's
apparently there was a massive like if you look in the options market, there was massive call buying just after that announcement, and some people absolutely killed it. Like, because there's a lot of zero DTE options now.
Yeah,
so
right.
they just bought some out of the monies for like a cent. Next thing you know, they're $4 or $5 in the money.
Then there'd probably be one or two options houses that got cleaned out, I'd say. If they're selling premium with 3 hours to go, they just got
there's a lot. So because I follow the options market, there's a lot of people that sell those things naked because the clearing houses haven't adjusted their margining yet. So
ouch.
Yeah, exactly. So they're like, I'll sell all these wings, and 90% of them expire worthless. But the 10%,
that 10%,
that 10%,
that's 60% of the time it works every time.
That's exactly right.
So we do have.
So this is for next week.
Then next week's
this is this week.
Oh no, it is this week.
So big night tonight for the banks: BlackRock, JP Morgan, Wells Fargo, and then Goldman Sachs. Obviously next week. Start of the week, some familiar brands, but.
It starts off pretty slow. We won't get the mags until the following week.
Oh, but like a JP Morgan calls massive. Like if
Wells Fargo's on BlackRock.
Yeah, so obviously if they're saying that they're financing divisions pumping along, you're like, okay, the economy's.
Well, Jamie Dimon's always bearish, so surely JP's done well. So
the numbers.
No, he seriously is. He's been calling the downfall of the market longer than I have. Like I think which is a bit odd for a company that does investments, but so commodities really
So I think I said this at the beginning of the show, but basically everything except gold got absolutely smashed. So gold only dipped a little bit below 3,000, and then it's back at 3,200 now. So and as Mark said, we've switched out of, we sold some of the spot to buy the miners. And the thinking behind that is, even if gold were to drop back down to below 3,000, these miners are, and I don't know the actual stats, but they're printing more cash than the tech stocks at the moment. That's how much money they're making.
100% margins, basically. But all gold's got to do now is stay where it is for a year, and these guys will start to play serious catch up. Whereas gold's run really hard. Like we're still bullish gold. Don't get me wrong, but this is at a point now where the miners will start, and they did towards the end of the week. I mean, we bought the gold miners ETF. We switched Wednesday. It's already 10% better off.
Yeah.
And what happens with the index selling is the gold miners opened down 10%, even though their product that they're selling was up 2%.
Yeah.
So that's where index selling gives you a massive opportunity, and we kind of did miss that a little bit. I think we really. I mean, there's only so many things we can do, basically. Like. And at the time, it was a bit of a low priority. But that's the disadvantage with you need a team of thousands, and you need them all to be doing the right thing at the right time. Like it's almost impossible.
Yeah. And I would like to. Oh, it's not there, but so crude and copper. Crude was actually down, I think 24% from the high to the low.
Oh yeah, so
and copper was down 23%. So.
It got to $4 copper.
Yeah, absolutely enormous moves. And it just shows you how quickly the market went from risk on to what the hell's going on to sell everything.
We were doing the PDF for Bulls and Bears, Bulls versus Bears, and I was removing the copper hits record highs article off.
Yeah, that was only a week ago.
I think it was 2 weeks ago.
Yeah.
So I feel like, we're doing like a year's podcast in one podcast basically at the moment.
That's what I feel like.
And what happened in space lasers? We got an Israeli military contact, EOS. So
the military's doing a trial of the new weapon system from EOS.
Yep.
Could be a contract coming in there.
Yeah, sweet.
For the business.
We're a big fan of space lasers.
It's not actually a space laser.
I know, but
there's a laser in the mechanism.
Don't let truth get in the way of a good story.
That's absolutely right, mate. It's like, just let me have my space lasers, all right?
There's a laser there.
Yeah, there's a laser there. Okay. It's actually not part of the weapon system. It's just for it's one of those laser pointers.
That's it.
But yeah, so look, we're going to wrap this up because, to be honest, we're very tired.
Trade of the week?
No. We'll wrap this up after trade of the week.
Okay. Yeah.
Which is kind of more of a retrospective one because at the moment, I have agreed publicly to the Twitterverse that we're going to hold a little bit more responsibility for our trades on these. So we're going to do a retrospective one this week because, and I have been updating people on this trade over the week because no one has, unless you are a gypsy fortune teller, there is no way you know what's going to happen over the next 3 days. So we're probably just going to do a bit of retrospective for a couple of weeks because I don't want people to take on stuff because I feel responsible. Mm-hmm. And then, they're like, oh, crap, we're on down 50%. So Capstone Copper was one. I don't know whether we did it as a trade of the week necessarily, but
no, that
we got stopped. We got stopped out of that one pretty quickly. But this one's is the gear.
So that was the Monday morning. I looked at Mark and what do you want to do? But he said he pointed out the stats. He said these pullbacks generally are I think 25% the median.
So the median's 22 for the ASX. It's 32 for the S&P from the high.
Yeah.
From the record high, right?
And so we were already well close to that. So that's the downside risk.
4% away.
So not to say that the market couldn't fall away, and then obviously we went to sleep on the Wednesday night thinking, oh God, this market doesn't look
I thought we were cooked. And this was phase one of long-term dollar cost averaging. But the fact that it got back up there, we banked over 20% on this nearly. It depends. In calling clients, some people got 4% different fills.
Yeah, and that's the thing with the 2.5 times leverage. It all depends on your entry and then obviously your exit.
But the people we got before the open that put their bid in got set basically nearly at the low,
mm-hmm.
and then I think even selling how quickly people picked up the phone dictated.
Yeah, exactly. We made the call at about 9, and you're going through the calls. If you didn't answer it during that time,
you basically got a 5% worse.
It was like maybe a 3-minute window where it was above $28, and then next thing you know it's $1 lower,
which is the downside of of not being a fund. But although I would have had a differently stressful week if we'd have been a fund. But it was a good trade in the end, albeit I nearly threw up in the garbage bin as we placed it. And then look as well, I think we kind of discussed our trades of the week, and I'm very, very thankful we had a plan. So because I don't think this is the reason I was so big on it was I picked 2022's downturn and I screwed it up.
Mm-hmm.
So because I didn't buy on that Monday, or the equivalent of the Monday, and then I FOMO chased and then got allocated again and again, got the second and screwed up the second leg, and ended up having an okay year because we didn't sell the low, but we got out in October and got that second leg down. But I went back and did a lot of stats on, so it's about 280 odd days. So we're looking at from the high where you reach the low. So that's about July for Australia, and it's about October the 4th, which is about for the US.
Yeah,
so
I keep thinking about October in the US.
Yeah, so and so that kind of makes sense, but it normally does it in 2 legs. So I think the tariff thing will start to blow over, but then the recession fears will be the start of the second leg down. It's my opinion. But yeah, but that doesn't make much difference for healthcare and gold stocks and that sort of thing. Well, probably better for gold stocks because rates will go lower. So yeah, it.
And then what you got next? So fear and greed.
Oh yeah, fear and greed.
Let's have a look. Oh yeah,
yeah. So
pretty much extreme fear in all sections.
I don't think I've seen an 8 before.
We saw a 3 earlier in the week.
Was there a 3 earlier?
3.
Wow.
Yeah.
So, well, the media was at like a -20
from them.
So the AFR must be running around like Chicken Little must be the fucking editor there. Yeah. Sorry, excuse my language, but they just pumped out. It didn't matter if we were up or down. They could not wait to pump out a bad story all week.
A lot of it was just headlines, no content.
There was no content. Yeah, there was no content.
Well, that's their job. It's like basically get clicks now.
Yeah, I suppose so.
Is people writing there, or is that AI now?
Half and half.
Yeah, who knows? I mean, it can't be any worse doing AI, I suppose. But yeah, no, we're well, you would think. Well, I don't think we've seen it this low to make a because we've always sort of said like whenever it sits in that extreme fear that it's usually primed for a bounce. So.
Yeah. So anyway, so what's your call for next week? Are you bullish or bearish?
Well, I'm on a streak at the moment. I'm on about 5 straight.
Yeah, so. you weren't here last week, but there were the 3 bears.
I'd have been bearish.
But the thing, that's it. That's right. I remember now. We cast an automatic vote for you.
Yes.
So it wasn't a huge call, but yeah, Mark would have been bearish.
Statistically, you're pretty good.
I didn't see the actual difference though. Like, would we have been bullish or bearish? Like, I think
that slipped back down. And looking at that market map, I don't think there was not enough in the Mag 7 stocks to pull that back up again.
Yeah, so
because it was down Friday night, nearly 6. So there's no way it's got back to there.
Yeah. Okay. Well, so either way, so what's the call for next week?
I'm bullish.
You're bullish?
Yeah.
Not by much, obviously.
No, I think he's going to strike a deal, and I think we're going to go on, and I think people are going to get FOMO and push it. I think we might have one of the first weeks where once he, and this is highly speculative, but if it starts to calm down and gets watered down and he pulls stuff back from China, I think it might be the start of a couple of week rally, and then I think analysts this is even going further out. Analysts at the end of that, based on my experience in 2022, will sucker you into buying about 7% higher, and that will be the biggest mistake of 2025 to make.
Yeah, fair enough.
Bullish.
You're bullish. I'm bearish for next week. Just the rise in gold just tells you there's a lot of fear about, and the bond yields, like they're still very, very high, especially the long end as well. So I think the bond market might be telling us something, and the gold market. So that's my call. Rich?
I'm bullish until mid next week, and I think we've seen a bit of a pattern of midweek weakness. Yeah. So, I'm thinking we're going to see a bit of
midweek pivot points kind of thing.
So I'm thinking a bit of momentum till sort of Wednesday, Tuesday, and then potentially coming off again.
Yeah, but I think we'd all agree. I would not high conviction.
Oh,
It's often.
And like literally we could be right or wrong by 4 hours. Like it's so ridiculous.
Exactly right.
But I mean, the fact that we were bearish last week, and we've had to ask the question whether we actually won or not. I think that's a big lesson for people who are listening. Is like see the forest for the trees, because there is no way on God's green earth you'd be thinking like we had to stop the podcast before because I saw green on that market map because I thought we'd put on last week. So let me put it that way. So
it just shows you the volatility that we're going through.
Yes.
At this stage.
Yeah. So
it's definitely a day, and I think the way to sum it up is, and I did this on Ausbiz, is that this is a trader's market, because someone was asking for a longer-term view. I'm like, longer-term view? No way. This is a trader's market. Like, if there's a quick win, bank it. And and just move on to the next trade
and run. Basically, like if you can get a quick win. I mean, we sold Woolworths today, but not because we hate Woolworths, but it's like now there are so many great things to buy at great valuations. Woolworths has outperformed the index by 16.5% in the last 4 months now. So it's like, well, you own it to be defensive. It does its job.
Yep.
Now it's done its job. Even though we've made like 1% on that trade or that investment, it wasn't a trade. But now, like, it was different times when we bought it. Like, it was cheap against everything else being up. But now you can buy all of these other really great companies. Not that Woolworths isn't a great company, but like if it bounces, Woolworths probably goes down, and everything else is rallying up. So it it is, and they're the sorts of things that more, they're going to be more seen more by traders rather than investors, because everyone today was like, why are we selling? And I'm like, it's done its job. Like, it was there to give you some yield. But anyway, guys, stay safe. And, cheers, boys. We're sorry, excuse for having a beer this afternoon, but it has been the longest of long weeks. So we will catch you next week.
Thank you.